Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. Happy Cinco de Mayo, everybody. It's Tuesday, May 5th, 2020, and we are pre-recording this Trading Places Live for later this morning. Futures are currently up, though, poised to see a strong open. Dow Jones futures up roughly 250 points. Going over some of the things that we're going to talk about today. We'll go through, take a look at this agenda here. We got the daily market recap. I'm going to go into that. Then we'll do talking technically. I thought in talking technically, I'd show you a little bit how I'm approaching the market. Earnings Beats members are pretty familiar with this, but I've really broken down the market between strong accumulation distribution and weak accumulation distribution chart lists. And I'll go through that a little bit, talk to you a little bit about that. Then we'll get into the earnings spotlight. A lot of earnings coming out now, so a lot to pick from there. Go through some of those reports, upgrades, downgrades, and then we'll wrap up with the 3 you must see. But we'll get into all that in just a minute. I do want to let you know a couple of announcements. First, if you go over to earningsbeats.com, you can subscribe to our free newsletter, so no credit card required, just name and email address, and I'll send you an article Monday, Wednesday, Friday morning before the market opens. A lot of these articles are really about companies either that have just reported earnings or getting ready to report earnings, or maybe companies that are showing strong accumulation, weak accumulation. I think it's just really good, not just educational information, but maybe information that you could use in your trading. But just follow me over there. Just subscribe, name, email address. Click that subscribe. It's that easy, and then we'll start getting that newsletter out to you. And the other thing I wanted to mention is yesterday I was on the Daily 5, or your Daily 5 over at StockCharts. Have different analysts come on every day to share 5 charts. I shared 5 themes, but if you go to YouTube and just type in StockCharts Your Daily 5, you'll see all of these come up. But go in and check out my 10-minute segment from yesterday. I had 5 themes. I'm not going to ruin it for you, but there were 5 themes that I think you might enjoy. So check that out. Hey, let me know what you think. You can shoot me an email, tom@earningsbeats.com. Love to hear from you. All right, let's go ahead and move into the daily market recap. And yesterday was a pretty good day. We started off weak. It didn't look very good. Futures were down. We opened down, but we rallied back. And you can see all the major indices, except for the small cap index, managed to finish in positive territory. So we had the Dow Jones only up 26, but it was up. S&P 500 up 0.4%, up 12 points. NASDAQ had a really strong day. Some of the leaders in the NASDAQ rallied strongly off that earlier week open. And the NASDAQ overall rallied almost 1.25%, 105 points, back up over 8,700. Really good day there. Also, we saw some bounces off 20-day moving averages, which I thought was encouraging. Mid caps up 1 point, not as good as we saw across some of these other indices, especially on a percentage basis, but still bouncing off the 20-day, which was encouraging. Same thing for the small caps. As far as sectors go yesterday, energy had a nice day bouncing off the 20-day. Technology, same thing. Nice reversing candle on technology. A bullish engulfing candle down near that 20-day. Not surprised to see those stocks maybe bouncing further today. And with the green futures, that certainly looks poised to do just that. Utilities bounced, but utilities of the groups that did well yesterday, utilities I would say is the weakest group, down below both of its moving averages. You can see we've yet to get that golden cross, which is that 20-day moving average crossing above the 50. Still just a little bit below. So utilities have been challenged here technically of late. Communication services, though, well above its 20 and bounced nicely yesterday. And consumer discretionary right off that 20-day moving average, nice reversing candle. So all in all, I thought it was a pretty good day, considering that last week we failed at the 20-week moving average, had this long tail up above like a shooting star candle, which is a reversing candle. And then, again, yesterday it looked like we were going to roll over quickly. We had the lower open, and then buyers came right back in again. And that's what we've been seeing. The accumulation distribution, which only looks at the intraday data, doesn't look at whether you gap up or gap down. A lot of these accumulation distributions have continued to point up even throughout the month of March when the market was getting hit hard, you can see that the accumulation distribution was actually trending higher in most areas of the market. I find that to be very encouraging. If there was one area or one chart here that didn't do very well, you can look back and see it was energy, where back in March we were setting new lows in the accumulation distribution, but we're trying to recover there. I think it could be a little bit slower recovery in energy. All right, let's move on to the 10-year Treasury yield. Couple economic reports out later today. April PMI services and April ISM non-manufacturing, both will be out. Both are expected to be horrible reports. The PMI services in March was 39.8. That's projected to drop to 27. So from 39.8 to 27. The April ISM non-manufacturing projected to drop from 52.5 in March to April's estimate of 37.9. So the market is anticipating. I know a lot of folks really don't get the connection between what's going on Wall Street and our economy, but Wall Street's already looking past the current reports. Wall Street's looking down the road 3-6 months, trying to figure out what's going to happen then. The fact that we're getting all these horrible reports now, that's what Wall Street took into account back in March when we had the big drop. So don't try to look at current economic developments and tie it into today's current market action. I think that's a big mistake. Okay, so let's take a look at this 10-year Treasury yield. And yesterday it bounced back again, another hollow candle. So we're seeing yesterday when the market was weak at the open, a lot of money was rotating into Treasuries, and therefore the Treasury yield gapped down at the open. But like we have seen so often over the past 7-8 weeks, we had a reversal. So the 10-year Treasury prices came down after the open and the yield rose. Now, what I'd really like to see is get us back up above that 20-day moving average. Been talking about that a lot, but I think if we start to trend higher in the yield, that would be more and more of all this money that's poured into Treasuries the past few months. More and more of that could rotate toward equities. I know I'm probably in the minority, but I still believe later this year, I think the stock market's going to really confound people. It probably already is, but I think it's going to go higher, and I think we're going to break out. I don't know if it'll be in 2020, 2021. I would not be surprised if we set an all-time high in 2020. Very low historical interest rates. There's still a lot of companies out there that are growing their earnings rapidly, even in this environment, and because of this environment, really. And so those companies are going to attract very, very large valuations as a result. If you can grow your earnings rapidly when interest rates, current market rates of interest are at all-time low, those earnings become extremely valuable. So yeah, airlines, cruise lines, all these companies are going to get hit. They're going to have problems rebounding, but focus on a lot of the other areas of the market where earnings are growing rapidly. And that's where you want to be. And that brings me to talking technically, because I want to talk a little bit about that, the strong AD chart list and the weak AD chart list. This is what I focus on now, mostly in my trading, mostly in my conversations, my discussions with Earnings Beats members, the daily market report that I do every day. I really try to focus on these chart lists. So what I did for the strong AD chart list is I went through every sector and ran a scan for every sector to give me all the charts that have scooter scores, StockCharts technical rank, which is a relative strength measure, all the scooter scores over 80. Once I had all those scooter scores over 80, I made sure that they were liquid and so forth. But then I ran a further scan against them, or actually I dumped them all into one chart list and then looked at the entire chart list using the candle glance. And I could quickly go through and see what the accumulation distribution was looking like. And when I ran the scan, if it was still looking strong or if it recently had set a high, then I included those on my charts. So you'll see most of these. Now, it's been a couple weeks probably since this came out. So I've got a couple like this one over here. Autodesk has deteriorated a little bit. AGIO's deteriorated a little bit. But for the most part, these accumulation distribution lines are pretty strong. And If I flip over to the weak AD list and we look at the candle glance, you're going to see pretty much the opposite, although here's AAN coming back pretty strong. But for the most part, most of these stocks are going to show weak accumulation distribution, mostly in a downtrend. And so the whole idea here is that when you look at accumulation distribution, it tells you really what stocks are doing after the opening bell. And if there's one thing that I spotted early, back in late February, early March, is that the stock market was gapping down, but then we had a completely different market once we opened. Most of the losses were occurring at the opening bell. The rest of the day was maybe a little bit of strength net over the last 8 weeks. Well, probably more than just a little bit now, but we saw strength. But the problem was some companies were rallying after the opening bell, and others, like the airlines and like cruise lines and hotels and gambling stocks, they kept selling off. They would gap down and keep selling off. But many other stocks on my strong earnings chart list, or strong AD chart list, would gap down and then turn higher. And that was, really the key. I mean, if you look at a company like ACAD, here's your accumulation distribution. So prices February, March were trying to go lower, but look at the AD line going up. And if you look at these charts, if you're a candlestick fan, you know that these filled candles represent closes below the open. And when you see that, generally you're going to see a weak pullback in the AD line. But if you look at all these hollow candles, that's where you're closing above the open. So all of these, many of these days, you see the hollow candles, and that's why you're seeing the strong AD. So the whole point being that when you get a gap down, look at ACAD yesterday. Gap down yesterday, came back up, printed a nice reversing candle. That's a piercing candle, which is a reversal off of a downtrend. But we gapped down and then we rallied back. And we've seen it so often in these stocks that are on the strong AD chart list. Anybody who's interested in these chart lists, by the way, we've got a really cool feature at Earnings Beats, and StockCharts helped us on this in being able to download our chart list so simply. Literally, let me show you how easy it is to download these chart lists. So once you're signed into your account, over at Earnings Beats, you can go down to these chart lists under members, go to the chart lists. Here's the strong earnings. Now, this isn't strong AD, weak AD, the strong earnings. That's a completely separate chart list. But you can go in and download these chart lists right into your account if you're a StockCharts member, extra or above. So I would highly recommend that you get an account set up at StockCharts. And then if you come in and take out our $7 trial, which is a refundable $7 trial. So for 30 days, it actually is free. We'll refund you the $7. You get a free 30-day trial over at StockCharts. You can use both services for free for 30 days. Go in and get these chart lists. Just download them into your account. Here's the strong AD, weak AD. The only thing is, just make sure you use the password that we give you, because when you hit this button, now I've done it before, so it won't ask me. It's not going to prompt me for a password. But if I click this, it will prompt you for a password. You just put in that password that just showed. So it'll be right here. Just type in, it's case sensitive. So capital SAD 372, that will get you the strong AD chart list. Once you type that password in, and then it'll bring you to this screen. And you can just save to your chart list. So click on the save to your chart list. You can either put in a new chart list, name it, whatever you want, or you can replace it. Now, obviously, if you don't have one already set up, you wouldn't replace it. But I would recommend just using a new chart list and just calling it whatever, strong AD chart list, whatever. But that's a pretty cool feature for our members. Just as soon as we get done updating it, we put it in here with a link. They click on it, download it in 5-10 seconds, and it's in your account. All right, let's keep moving on here. Want to go through and take a look at a couple of earnings reports. Let's start off with AIG. Now, I mentioned at the top of the show to sign up for our free newsletter. AIG was a company that I wrote about on Friday in Friday's Earnings Beats Digest newsletter. And I didn't like the stock, and I'll show you why. So it's in a downtrend, tries to rally. Look at the AD line. So a lot of the companies I was showing you, you saw the AD line turning up. Here's a stock that was selling off and the AD line kept going down. Not a lot of hollow candles in here. Most of these are filled candles, meaning that not only were we gapping down, but we were then selling off during the day. That to me is a sign of significant distribution. Look at the volume on those days. That's a lot of institutions getting out of the stock. We get a rebound. The market's been putting in higher highs. AIG has not. Could not get through 2750. Started rolling over. They reported earnings yesterday after the bell. Earnings were not very good. Let me just give you a quick update on. They missed big time on their bottom line. By the way, they came in at 11 cents. The market was expecting 83 cents. Now that doesn't always translate into a lower price. Sometimes it's sell on the rumor, buy on the news, just like it's buy on rumor, sell on the news. But let's see what I haven't looked yet this morning. It's up a penny, so it really hasn't done much after reporting yesterday. But I don't like the stock. I think it eventually goes lower, or at least it underperforms. I'd be very surprised to see this stock outperform going forward. Now, another company that reported this morning that I wrote about yesterday that I liked a lot was REGN, which is Regeneron Pharmaceuticals. And I'll show you that chart in a minute. Stock's up 4.25% after earnings this morning. So it is up $23 to $5.64. But let me pull up this chart and show you the difference between the charts. So obviously REGN's been going up. You look down here, look at the accumulation distribution. Even when we went down in March and went down to these prior lows, this never went below that prior low, never even made it back down to this low. So I think REGN was looking good. And then when it moved higher, look at all the hollow candles in here. Lately, we've had a few filled candles came back down a little bit. Now we're trying to turn right back up again. And we're getting a nice gap up today. Not far from another 52-week high. It may break out to a 52-week high with its earnings today. We'll see. Let's take a look at some other earnings reports. What else do we have here? How about WMB? I'll tell you what, I'm going to go over here and let's put in so I can see what we're doing pre-market. So WMB is up about 1%. That's 1930. Pulling up the chart here, 1930. Well, it's been in a nice uptrend. This one was going down, accumulation distribution, but during March, it actually started to go up, even though prices were going down. And now it's trying to break out to about a 3.5 month high on its AD. So this one definitely is trying to turn the corner. I don't know if we're quite there, but I think as long as it continues to trend above its 20-day moving average, I'm okay with it. Another company reporting, by the way, WMB did beat 26 cents versus 25 cents. And REGN, Regeneron, they crushed their estimate, 660 versus 573. So it's not hard to understand why there was accumulation taking place ahead of a strong earnings report. SWKS, this is Skyworks Solutions, still trending higher. The stock matched estimates, $1.34. And in pre-market, we're up 2%, 101.55. So still got to get through about the 106, 107 level, which was also an area over here where we struggled at the beginning of March, right around 106, 107 was that intraday high. If we can get through that, I think that would certainly help technically for SWKS to maybe make a move back up toward the January, February high. To the downside, I would watch right around 95 bucks. I think if you go below 95, you lose price support, you lose your 20-day moving average. I would suspect that Skyworks will hold on to that area. FIVN, wanted to talk about this one. This was a company that has been trending higher, it's been on fire, breaking out to 52-week highs, nice volume. Look at the accumulation distribution. They did beat on their bottom line, came in last night, 17 cents versus 15 cents. And this morning, stock down 8.74. All right, so this is the perfect example of a buy on rumor, sell on news. I would maybe be thinking about buying the stock on this gap down, knowing that the stock has been accumulated. Let's see if I can pull this up for you here. Yeah, knowing that we've got this accumulation, do you see many filled candles? So I'm thinking you're going to get a gap down, maybe an intraday move lower, but I'd consider, if you're more aggressive, I'd consider maybe buying into that weakness, just buying small shares. And if it keeps dropping, buy down to maybe 80 bucks. and then look for that reversal, because we haven't seen many big filled candles. And so that's one of the advantages of stocks on the strong accumulation distribution chart list. When these stocks gap down, especially after it came out with good numbers, I think it's, a lot of stuff was built in. They came out, they delivered, and then the stock moves lower. A lot of times you'll get buyers coming in on that move to the downside. So this is one I'd keep a really close eye on today. One other company I'll talk about quickly here, and that is Wayfair. Wayfair reported this morning. And this is another one I was expecting a big report out of. Look at the move that Wayfair has made. It was down in the 20s at that March bottom, and now it's 134. Talk about a move. Wayfair has been one of the best performers. Look at the volume coming in. I think it looks great. The biggest problem I have with Wayfair is just the fact that it's run up so far so fast. Now, Wayfair did come in. They beat earnings expectations. There was a big loss, but it was better than the bigger loss that was expected. And this morning, the stock is down 2%, 131. So we might run into that buy on rumor, sell on news. If it were to get down anywhere close to that 20-day moving average, I think Wayfair would be a very strong trading candidate. All right, upgrades and downgrades. Let's take a look at a few of these. And by the way, coming up after the bell tonight, Disney reports, Activision, Electronic Arts, Verisk, VRSK, KLA Tencor, KLA Corp, I guess it is now. But KLAC, that's a big semiconductor. Beyond Meat will report. And then another recent high flyer, Enphase Energy, which is a renewable energy stock. They will be reporting after the bell. So a lot of companies, and the number of companies reporting this week are just off the charts. No pun intended. All right, Harley Davidson upgraded today. So HOG, I like this pulling back to the 20-day. This is a stock that had been, kind of so-so in terms of accumulation distribution, but it did get the breakout. I like that reversal at the 20-day yesterday. So I'm not surprised that the stock is being upgraded today. Let's see what it's doing in pre-market. Yeah, up 3%, not a surprise off that reversal. So there we go. So stock up 3%. I think it's got a chance to run back up toward that 24 level. To the downside, watch this gap support in the 20-day moving average. Volume really came in, though, on this push to the upside. That makes me feel a lot better about the company on a pullback. A small biotech, Adverum Biotechnologies, ADVM, upgraded today. This is a stock, I mentioned this one. I wanted to mention this one because look at the AD line. I think there's been some accumulation in this stock over the past couple of months. Even though prices were going down into March and early April, you can see that we held lows, kind of trending higher. And now as soon as we start moving, you can see the AD line breaking out. Nice candle yesterday. So that triggered that breakout on the AD line. But I would suspect ADVM is going to go up and challenge the 16, 17 area. That's what I would be looking for eventually. Another smaller company, BCRX, being upgraded this morning. Now this one on the way down, you could see set a new AD low, but over the course of the last 3 weeks, look at the volume coming in and the AD line starting to move higher. Look at the heaviest volume day. The stock actually went down from the prior day, but because it came up so much off of that low, it actually was a positive day for the accumulation distribution. So you can have a down day. You could actually, the stock can lose ground and still go up in accumulation distribution. And that's what we've seen throughout this, rally. Or even what we saw during the drop back in March. We saw prices going down, but we saw a lot of AD lines rising. This one's starting to play catch up. So just, it's a smaller company, very volatile, not for everyone, that's for sure. But watch this. If we can make the breakout above that 430 level, I think this one could really move. Downgrades, couple downgrades, and then we'll finish with 3 you must see. OMI, which is Owens and Minor, downgraded today. Actually, I don't know about this downgrade. I think the downgrade could provide a nice entry. See if it's oh, let me go back this. Wanted to see what it's doing. Actually, it's up 3 cents today. If it was down, I actually might be interested. Anything down around that 20-day moving average with this strong AD, nice volume here on this move to the upside, I actually like it. So OMI, I think downgrade, if you see some weakness, that could be an opportunity. TSN, downgraded. Tyson Foods. Yeah, not a fan here. Kind of giving my hand away a little bit. I'm going to feature this one on the 3 you must see in a minute, so I'll come back to this. And then one other downgrade was Wells Fargo, WFC. Look at this stock. It's just been horrible. It's barely above the low in March. The accumulation distribution has been going lower. I would stay away. I mean, if you're going to get into a bank, which is not, banks are not doing well with the 10-year Treasury yield under so much pressure the last few months. But if you're going to get into a bank, get into one that's leading, at least leading other banks. One of the strongest. JP Morgan would be a much better choice than Wells Fargo, in my opinion. I've been saying this for a long time, but this AD line's really bad. Looks like a lot of distribution still taking place in Wells Fargo. All right, let's wrap this thing up with the 3 you must see. I'm going to start off. Yesterday, by the way, over at Earnings Beats, I gave 3 stocks I really liked, and they all went up. Today, I'm going to give you 3 I don't like. I'm not sure they'll all go down, but they're 3 I wouldn't want to own. First is ITT. This is, well, you can see the company took the big hit back in March. Also, the AD line went down to a low here. It's bounced back in price, but the AD line really hasn't bounced much, and now we've come down, lost our moving averages. I don't know, volume's starting to pick back up again. Looks like maybe a trend line's been violated. I think ITT's got some problems here. May struggle to get back through 50. I'd be careful with this one. Next up, want to just mention Tyson Foods, TSN. Just don't like it. Again, you can maybe draw this trend line. It's been broken below the moving averages. Look at the volume pickup in the selling. New low on the accumulation distribution yesterday. So, it's kind of hard to argue this stock. Gets up to the center line on the PPO, starting to roll back over, breaking down in price, below the moving averages, new AD low, heavy volume selling. I just have a problem trying to argue for this stock. Pretty tough there. All right, final one is going to be Lyft, LYFT. And the Lyft, similar chart. I mean, again, look at the AD line. It's hard to argue that a stock should be bought when the AD is setting a new low. We're rolling back over. We've lost our moving averages. This is all different than what the overall market's doing. The overall market's still holding on. I started the show showing you all the major indices holding on to their 20-day moving averages. And now you've got some of these stocks I'm mentioning here that are rolling over and are under their moving averages. So you've got relative underperformers. You've got stocks that, in my opinion, are being distributed pretty heavily. I would stay away. So those are your 3 you must see for today. Just a quick reminder before we wrap up, you can go over to earningsbeats.com, and if you go to our home page, you can sign up. Actually, I'm in the member page, but if you, let me try this now. There you go. Go over to our home page, and you can sign up for our Earnings Beats Digest free newsletter. And then also go to YouTube, type in StockCharts, Your Daily 5. Check out my guest appearance on Your Daily 5 yesterday over at StockCharts TV. Everybody have a great day, and be back on Thursday. Happy trading, everybody.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.